Welcome, everybody, and thank you for joining this month's Founder Investor Meetup event. This is our fourth in the last 6 months.
How do you recognize that a company really has put into action a lot of the right kinds of business, operational, sales, marketing practices that is going to make that business interesting to you?
For us, I think first and foremost is just making sure that the product that you're producing at a unit level is ready to go to market, that it's a gross margin on a fully loaded basis, including freight and logistics, that has you well positioned to get onto shelf and to start to then subsequently begin to think through what a path to profitability looks like. But you can't have that path to profitability if your unit level economics are broken to begin with. For us, it's being able to look at enough data to understand both your repeat purchase behavior on the digital shelf, as well as some proxy for velocity on the physical shelf. And then I think finally, for us, when we think through opportunities and how companies can demonstrate that they are well positioned for investment is capital efficiency. It's, for us, we define it as your trailing 12 months revenue divided by the total capital raised to date. We look for that to be a 1-to-1 ratio before we will even consider an investment. And I think from our perspective, what that demonstrates is both management's ability to effectively utilize capital, to deploy that capital to gain, really a dollar for dollar use of capital to drive revenue. And for most of the brands we look at, we're actually seeing more of like a 2-to-1 or 3-to-1 ratio there than that 1-to-1. But the 1-to-1 for us is just a starting point.